Finally, we might actually have some good news to talk about Social Security. Donald Trump has promised to eliminate the federal income tax on our Social Security benefits, which, according to the Social Security website, impacts about half of all Social Security recipients, about 40%. And this is a significant tax for folks, and it would be a huge boom for retirees because about half of all Americans rely on Social Security to pay half of their expenses or more in retirement. So just quickly, the way taxes work on Social Security is for folks making between $25,000 and $34,000 if they're filing as an individual, and this is their combined income. That means that up to 50% of their benefit can be taxed. And if they're making more than $34,000, up to 85% could be taxed. And for people that are married filing jointly, those numbers change between $32,000 and $44,000, up to 50% of our benefit can be taxed. And more than $44,000, 85% of our benefit can be taxed. So this is a big, big deal, and eliminating that tax on Social Security would be helpful. So in today's video, I want to share, this is not a political channel, but I want to share both what the Democrats and the Republicans have said about taxing Social Security, because it's important, because Donald Trump on his own cannot do this. He needs the support of Congress and Senate in order to make this happen. So taxing Social Security has a long history. It started when Ronald Reagan was president, and that's when we came up with that 50% taxation. And the thinking then was the employee is putting in half of their money to pay that tax, but the employer is putting in the other half, and that wasn't taxed when the money came in. So that was the justification for taxing half of Social Security. And then when Bill Clinton was president, we went up to 85%. And basically what the actuarials people did was look at it and say, well, about 15% of what we get back is the money that we put in, and the rest was earnings on that. So that's how they justified the 85% tax. But none of us like being taxed on Social Security. And those dollar amounts that above $44,000, above $32,000 that I mentioned earlier, those numbers have not been adjusted for inflation since they were first put into place. So when they were put into place, almost nobody paid tax on their Social Security benefits. And they're sneaky, right? Congress and Senate and the president has to pass a bill that can get passed, but yet seniors don't like their Social Security benefits being taxed. And this has been a debate that's been going on for, it'll be 40 years now in 2025. So it's something that has always been unpopular. And the challenge is we have to balance this. We have to balance eliminating the tax on Social Security, because somehow these tax dollars that our Social Security benefits are taxed on, according to Congress, according to Social Security, this money somehow ends up back in the trust fund. Candidly, I've tried to figure out how all that works. I don't know. I'm not an accountant. I'm not a political person. So I don't know that, and I have to take on face value that indeed that money goes to prop up Social Security. Unfortunately, the Social Security Trust Fund is set to run out of money by the end of 2034, 2035, according to the chair of the Board of Trustees, who is Janet Yellen. Every year she issues a report. We'll get the new report in a couple months from the time that I film this. But currently it's 9 to 10 years from 2025 that the trust fund runs out. Now that does not mean that our benefits go away. But what it does mean is the current taxes being paid into the system will only cover 70 to 80% of the benefits being paid out. So the day of reckoning is coming, and from a political standpoint, getting something through like this is really going to take a lot of support from the public and a lot of political capital from somebody. And I want to share, I mentioned earlier, I'm not a political channel, but I do want to talk about the Republicans, before Donald Trump was elected president, came out with a plan called Fiscal Sanity to Save America. And in there, they addressed eliminating the federal tax on Social Security. And then on the Democratic side, in 2024, Congresswoman Angie Craig submitted a bill that was called You Earned It, You Keep It. And it was legislation to eliminate the tax on Social Security, basically by continuing to tax people instead of capping it out on a salary. Right now, it's about $165,000 a year. Above that, people don't pay the payroll taxes. They don't pay the Social Security part of payroll tax. So the thought there is our benefits are capped. So therefore, the amount of salary that we make to be taxed on Social Security is capped. And Angie Craig was basically saying, look, let's let everybody get their Social Security benefits tax-free, but let's eliminate that cap essentially on Social Security, where no matter how much you make, you continue to pay Social Security tax. Both you and your employer continue to pay it. Now, I mentioned two things. I mentioned the taxation at 50%. I mentioned 85% of your benefits can be taxed. But I want to show the impact of raising the retirement age, raising what's called the full retirement age for Social Security. And you can see here for people whose full retirement age is 67, which is for those of us born in 1960 or later. If we take Social Security before our full retirement age is 67, you can see on this chart, at 67, our benefit is 100% of our full retirement age. If we take it early at 62, it's 70%. And then each month, each year, we get an increment added back to that. It's about 5 or 6 percentage points a year. You can see on the chart. And then it caps out at age 70, where we get 124% of our benefit. But I want to show you the impact of raising the age has had not just on when we can start taking it, so the lifetime value of our benefits, but also the monthly benefits. So for people born before 1954, their full retirement age was 66. And you can see, because they can take their full benefit a year earlier, instead of it being capped at 70 at 124%, they get one more year of that 8% growth. So the maximum benefit at age 70 is 132%. And if they choose to retire early, instead of it being capped at 70% at 62 years of age, they are taking one less year of taking retirement early, because they get to take their full retirement age is 1 year early. So you can see their minimum benefit, if they take it at 62, instead of, for me and my peers born after 1960, instead of getting 70% of that benefit, they get 75% of that benefit. So that's a big impact. If you're curious what the average Social Security check is in the United States, that changes every month. But according to the Social Security website, in January of 2024, that amount was a little over $1,900 a month. That would be the gross amount before Medicare is withheld. So $1,907 is what the average Social Security check is. And then if you're curious what that is by age, for people retiring at 62, it's a little under $1,300. At 63, it's $1,339. At 64, it's a little under $1,500 a month, $1,460. At 65, it increases to a little over $1,500 a month, $1,563. At 66, it's $1,740, and that's the full retirement age for a lot of people that are currently on Social Security. Again, if you were born after 1960 or later, our full retirement age currently is 67, and the average Social Security check is $1,884. At 68, the average Social Security check's a little under $2,000, $1,948. For people that waited till they're 69, they get $1,945. And for people that waited until they were 70, to start taking their Social Security benefit. The average check is $2,038. So super important, this possibility of reducing taxes, eliminating federal income tax on our Social Security is super important. Another super important decision is when we decide to retire, and it's why I made this video up here. Why waiting to 65 to retire might be a big mistake. I'll see you in it. Bye-bye.